regulatory action that has caused challenges for all of us. But I will hasten to say that while we're going to use a specific example that relates to credit line increases and the potential for that to put a key source of revenue this year at risk, I think a lot of you will see in this presentation some applicability to a broader set of issues as well. So as we get started, I want to just welcome you all to the third installment in this series called CMC Solves, and remind you that we're going to be doing this every month on different issues. We've covered a couple of different areas of compliance in past sessions, and now we're going to do sort of a deep dive in one particular roadblock that's been put in our way as it relates to increasing revenue in 2013. But the solution to that, as we presented, I think will be applicable for a number of different situations. So we're going to talk today about credit line increases specifically. You know, what is the problem that the regulatory changes are creating, and what kind of solutions can we put in front of that that will allow us to achieve the ROI we need and continue to run our business. So that's the goal for today. I should just remind everybody that at the end, and frankly anytime during the webinar, if you have any comments or suggestions, please email them to us and provide us your feedback in the post-webinar survey that you'll get at the end of the session. And a reminder that next month we'll be talking about compliant contact strategies in the context of what can be done to meet with regulations that are being thrown in our path. So the whole series of webinars that we've been running is a function of a pattern that we're seeing, which is that in their zeal to help us manage our businesses better, our friends in the regulatory environment are putting some obstacles in the way that they perceive as necessary for us to do right by our customers and by our banks. But sometimes the product and service implications, unintended though they may be, make our jobs a lot more difficult. And I should hasten to add that this isn't just happening in the U.S. We've had some feedback from previous webinars, you know, hey, this seems like a very U.S.-centric approach, and we'd like you to expand your remit to cover our environment as well. So for those of you outside of the U.S., while this particular guideline on capturing verified stated income is the example that I'll be talking about today, we have the issue in a number of geographies. So in Canada, they require that you verify consent before being given a credit line increase. In the Republic of Ireland, you have to verify the hardship before you can make a change to somebody's program. In the UK, there's a willingness and ability data capture requirement that's very specific that is standing in the way of both making offers in the collection space and in terms of new credit offerings that are being made to the consumer. And then you have you treat your customer fairly requirements and restrictions even in the Republic of South Africa. So we're hearing this across the world, that regulatory actions are making it difficult for us to do our jobs, even though as we talk to regulators, that's not what they say they're trying to do. And in the case of the marketing side of the business, the credit line management side of the business, a consistent theme we're hearing is we want you to gather fresh data. And it turns out that the last time we may have interacted with the customer is when they formed their application and they told us about themselves. And now we want to take some management action with their line of credit, and the regulators seem to, across the globe, be saying, we want you to gather fresh information from that customer. So what I'd like to start with is just get a poll going and see how many of you guys on your banks routinely or systematically seek out financial data from your customers after the loan application is in hand. So I'm going to, if I can do this, here we go. I'm going to launch this poll and give everybody 30 or 45 seconds while I grab a drink of water to tell us about your situation. That's excellent. A couple more minutes, or seconds rather, just to close out the poll. So it turns out about half of us have the situation where the bank is systematically seeking financial data after the loan, and less than just less than half say no. We have actually been trying at CMC to talk to regulators and examiners, both from the CFPB and the OCC and from some of the international regulatory bodies. And we've been hearing different things when we talk to different regulators. So I wish I could sit here and tell you exactly what we've learned translates into an exact course of action, but I'd be lying if I said that. And the familiar problem is, there's a little bit of a murky, dark, and foggy set of requirements that's being laid on us, and we've got to figure it out for ourselves. As it relates specifically to credit line management, it used to be the case that I could automate through my adaptive control layer some sort of a strategy that then segments out those people that are qualified for a credit line increase. I could then give them that increase, send out the letter, and that was the end of it. And the guidelines, which as I understand it, haven't changed all that much on making decisions to extend, renew, defer, or expand credit, have stayed the same. But it seems that if I call out the specific part of that, it's now being more enforced by the regulators we're talking to, that you can prove that you communicated specifically with the borrower, they agreed to repay the loan in full, and that they have the ability. And as we know in CFPB pronouncements specifically, it's no longer good enough that we intuit that. It seems to be their requirement that we can prove that we have communicated with the borrower, and the OCC seems to be jumping on that bandwagon and then some. We've heard, and I think this is the subject of our first webinar, we've heard from both ORIAMA Roundtable participants and from some of our clients that they're being told by their OCC examiner that even such simple things as programs for delinquent customers, repayment programs, are now requiring of them to reach out and talk to their customers. And so if you don't have on your web the capability to capture that information from the customer directly in real time and respond to it, there are some people thinking they can't even make web-based offers, to which we say, hey, talk to CMC because we can help you get beyond that problem. Specific to credit line increases, we've been hearing from a number of people that they're not even issuing them anymore. So I'm just curious about the folks represented on this call. Is that the case in your bank? Have you been inhibited by recent regulatory changes specific to credit line increase as to your ability to make these offers? I know from just anecdotal conversations with our customers that there are some banks that are no longer issuing credit line increases at the moment based on this new requirement that you have to interact with the customer directly. And I'll give you another 10 seconds to respond. Everybody seems to be responding here. So it looks like about 40% of the folks responding are saying, yeah, you are restrained, and 60% are saying, no, we're not seeing constraints. That's interesting. When we looked at that last guideline and what it's requiring us to do, it's clear that in both that plus our conversations with the regulators we've spoken with both in the U.S. and abroad, the regulators all seem to be saying, we just want you to talk to the customer and make sure that you know their current situation, not just their previous situation. But we'd like there to be less judgmental reaction. We'd like there to be less waiting once you do get the information from the customer. And we want there to be some consistency, and so we don't want the inconsistent application because we want fair and consistent practices so that you can avoid the appearance of disparate treatment. All of our clients are telling us, proving the negative, how do I prove that I didn't do these bad things, is one of their biggest challenges, one of the biggest time sinks in terms of the number of people and the amount of resource that gets expended trying to prove compliance. So if you think about where that leads us, I have heard some clients say, only way we can do this is to reach out and have an outbound call, have an interaction with our customer, and gather their information so that we can now deploy a credit line increase. I'm just curious about those of you on this call. Is this something that you're doing today? Are you making outbound contact attempts to try to get to current customers in the hopes of getting information that leads you to being able to do credit line increases? Or and I take it, therefore, that the people who have stopped doing credit line increases clearly aren't doing this, right? But those of you who are doing credit line increases, it looks like, I'll give you another 10 seconds. I love how responsive you guys are this week. Everybody's sort of getting the drill on the CMC webinars. So it looks like about 1 out of 4 people are going ahead and making these calls, and 3/4 of people aren't doing it. So I'll close the poll. Clearly, if we're going to solve this problem, we have to be able to capture borrower data and the borrower's agreement, but equally importantly, we have to document it in a fashion that we can later get to proving. What we think is that the program offer, in this case a credit line increase offer, has got to be individualized to the circumstances of the customer so that we can prove both that we captured evidence of willingness ability and that we then applied a fair and consistent decisioning methodology, and that methodology included capturing and proving the borrower input and the borrower's agreement. But most importantly, how do I do this cost effectively in high volume? That's what people are flummoxed by, because as you know, making those outbound calls are really expensive. So an alternative that we propose is making it very easy for a customer to whom you'd like to make a credit line increase offer to come to a web-based platform that allows them to enter certain pieces of information like their income, like their employment status, like their housing payments, and to be able to decision in real time and give them back an answer as to whether or not they satisfy the thresholds for the credit line increase, or if you just want to say thank you very much for your input, we'll get back to you later, which means no in my interactions with banks. And we think this sort of a web-based way of doing it is the right way to go, both because it's got the cost-effective profile that you want and because, frankly, consumers prefer it. So the policies are an attempt to make us get an interaction with the borrower and provide evidence of the customer's willingness and ability to take on this increase in the credit line. And they'd like to know that it's done fairly and consistently with account-level auditability. And the MIS, as per the guidelines, verifying that the policy is implemented and executed according to the stated preference for doing it. So last poll question I'm going to ask about your own organization. Do you have a current system that allows you to gather and decision the customer's responses in real time? And the second part of this question, which is key, is it the same whether somebody comes and talks to an agent or whether somebody is doing this online, which we'll get into here in a second. Key component. So I'll give you another 15 seconds. You guys are very responsive, which is awesome. I'll grab another drink. Okay, so I'll close this out. About 30% of the respondents say yes, we do have this systematic way of doing it, and over 70% are saying no, we don't. So let's talk about that. Customer credit line increases really ought to be the same, whether the person calls in and speaks to a highly trained and unfortunately expensive agent, or whether they go online, be it from their laptop or from their mobile smartphone. And what a real key principle of this is, and in our experience, is if you take the total population of folks, and I don't know if you can read this very well, the top of the funnel is all the people that you've made eligible for the increase, however you did that, whether you did it in your SAS modeling, whether you did it in your adaptive control layer, or whether you did it on CMC and our decisioning, regardless. You pick a population that are eligible, you invite them either by email or by a letter or by a banner advertisement on your online banking site, and you say, we think, Vitas, that you're eligible for credit line increase. We're seeing very high rates of response. Upwards of 8% of the people we're seeing are responding to these offers in our experience with customers, which is outstanding. And A, that's a credit to our clients who have been picking the right populations to make the offer to. And it's not like you're in collections trying to get somebody to come in and pay a past due amount. You're talking to people about wanting to extend more credit to them, and that's right now in this current marketplace very highly valued. As an aside, I don't know about you guys, but I'm starting to see in my mail something on the order of 7, 8, 9 offers a week for use the credit card I have to transfer balances or get a new credit card relationship with this, that, and the other new provider. So I'm starting to see the marketing whoopee machine cranked up like it hasn't been for the last couple of years. And that means that the time to make your credit line increase offers is now before the client, the prospective customer, gets too many other alternatives. So just as an aside, what we're seeing so far in the last 5 months is a very nice response rate to the offer to get a credit line increase. The other thing we're seeing is that the vast majority of the people coming in are coming into the web. Something like 85% on balance across our experience are people that respond directly to the website, and only 15% who come in and call the call center. And then the number of people who qualify once they're in is, as you can imagine, a function of the models that you're using to determine who to make the offer to. But the kind of percentage of the applicants that are qualifying is right in line with our clients' expectations for the models. And that varies a little bit, but not substantially, between the folks that come in on the web and the folks that come in by phone. The variance, as we understand it and think about it, is logical. If you don't know if you qualify, because you know something the bank doesn't know when you get the offer, you're probably more likely to call in than just go in on the web. And so we see a slightly higher acceptance rate from people that come in on the web, and slightly lower, but not substantial, not enough to be even statistically significantly different. What this tells us, however, is that a very high response rate coupled with a very high percentage of people that come in through the web means that this is much more cost-effective than the traditional ways of getting it done. And so a key part here is that the web interaction and the agent interaction are exactly the same. And that's how at least the FlexCollect solution drives this to be done. So in FlexCollect, we are able to provide you with the ability to drive people to a web portal or an agent-based conversation. In both cases, whether the agent is asking you the questions or you're being asked on the web, you're asked the same questions and you're given the same responses. So the programs are individualized based on the criteria selected by strategists. We support all the different program types that are required and the immediate decisioning to make that happen. All of the inputs and the borrower's agreement to the inputs are captured in the system the same when they're on the website as when they talk to an agent. And that then allows us to have consistency and fairness proof. In addition to that, there's no reason to stop at credit line increase data. We could be doing the same thing and are doing this for some of our clients to gather express consent at the individual device address level or update the consumer's contact information using this very low-cost channel of driving them into the website. And the fact that the vast majority of people who respond are responding via web not only maximizes their convenience and their ability to do it whenever they want, day or night, but it also makes the cost effectiveness of the solution really much more attractive. So in summary, I know that we only have 30 minutes. One of the things we're trying to do here is reduce the operational risk by creating a fair and consistent application of your policies, regardless of whether it happens at the agent or online. And to be able to prove that, both with an individualized audit trail for each customer interaction, but that the policies are executed systemically so that you can prove to the regulator that they're consistent. And that whole big issue of proving whether you got it right is no longer the issue, because you can say, here are my policies, here are my execution of those policies in the system, and here's an individually auditable proof that those policies were were executed consistently. So as it relates to credit line increases, we believe, because we can put this system in place right now today very quickly, that this represents a good revenue opportunity in 2013 for clients that are looking for a way to get beyond the concern that the unintended consequences of these regulatory actions would bring. So with that, I'm going to open it up for questions. I think there are a couple that we've seen come in online. Give a second here to read. So, question from Bill. Bill says, how do I gather up the data that you capture in case of an audit? Okay, great question, Bill. So all of the client input, customer input rather, whether it came from the web or whether it came through an agent capturing it in these questions that we set up in the FlexCollect system, are all captured into a consistent data store that is transmitted to you at the bank nightly, weekly, monthly, whatever frequency you want, and also feeds the system at your end that does the fulfillment. So I can tell you every single individual person that either interacted via web or interacted via agents, what data they presented, if they talked to an agent, when did it happen, with which agent, and so forth. And all of that data is captured so that you could provide it to the auditor for every one of the credit line increases that were granted or rejected. And you also have the rule set where you set the thresholds on what offers are made based on customer input. So it's all right there in the strategies that you create, which are printable right out of FlexCollect. You can give those to the auditor, and then you can print or hand them a file if need be of every single one that you did, or any aggregation of the ones that you did to show the auditors how it worked. Another question in, Marty asks, how much flexibility is there in the web dialogue and text, which is another excellent question. So subject of another webinar we'll have in a couple of months is our whole workflow management tool. But the short answer is that you can control every word that gets presented on the web, that gets presented to the agent, including whatever explanatory text you want to put above or below each question. And it can be different for the agent than for the web visitor. Obviously, you want to make it more self-service oriented in the text around the questions for the customer or the consumer, and you might want to put a little more explanation in the text for the agent, reminding them, for example, to prompt the customer and make sure this is your annual income, not your monthly income, and so forth. You can also, Marty, do things like put in specific edits so that if a customer puts in a number that is suspicious to you, you can have the system prompt the agent or prompt the customer for a follow-on question to make sure that that you're certain that the input you've gotten is the input you were expecting. I think I have time for one more question, so we'll take this one. Marion says, can I make my offer decision on the fly, or is it always predetermined and shipped to you? Okay, that's another excellent question. So the answer is that the decisioning is done on the fly based on the consumer's inputs in the questions that are answered either on the web or with the agent. The decisioning rules are set by you, and those are predetermined. So you set ahead of time what the threshold amount of income, for example, or housing payment or whatever would be, and you set what therefore becomes the offer for a credit line increase for that individual. So there is a predetermined element of what are the rules, but the decision based on those predetermined elements is made right at the point of the customer entering their information. So hopefully that resolves and answers that. And since I can't see you, Marion, I don't know how to know if I did it. I think we're pretty much out of time. Really appreciate your time, and it's an odd sort of interaction since I can't see or hear you guys. But I hope this has been useful, and that if you can give us any suggestions on how to make these webinars more topical and relevant, that you'll give it to us at the email address listed on the sheet right now, and that you'll give us your feedback post-webinar on how we can make these even more useful to you, as well as other topics, if there are specific topic areas you'd like to hear us cover in subsequent webinars. Thank you very much for your time, and have a great day. Take care.